Hi, everybody. We are so sorry about the technical difficulties with the sound. We're not sure what happened there, but I think we have them resolved. So I know a lot of you couldn't hear us from the get-go, so we're just going to kind of take it from the start, rewind, refresh. I wanted to say hi and welcome you all to our first Google Hangout. And again, apologize for the technical difficulties. I'm Jess, and I'm with USA.gov. And today I'm hanging out with Marietta, who is the editor of our Consumer Action Handbook and our expert on all things being a smart consumer. We are here today to tell you a little bit about the Consumer Action Handbook. If you're not aware of it, it is basically a survival guide for your money. It can help you make big decisions like buying a house, buying a car. It can also help you plan smaller purchases. It can help you understand your credit, make good decisions. Marietta, did that about sum it up?
That really did. It was a great summary. A couple other things. It's a great resource if you need to file a complaint. We have a great sample complaint letter in the handbook, as well as this huge directory of corporate consumer protection offices, state and local consumer protection offices, so it makes it easy for you to be able to get in contact with who you need to contact with to get your problems resolved.
Oh, I can't even believe I forgot the sample complaint letter. That is probably one of the best, one of the best tools in the handbook. And the reason we're having this hangout today is because the most recent edition of the Consumer Action Handbook is actually available. It's a free tool, so if you want to be an expert just like Marietta, you can get your own copy by going to promotions.usa.gov/my-cah. And last week, we asked you to send in your questions about all things consumer issues, everything from credit and credit reports to housing and mortgages, and we were so overwhelmed by the number of questions we got. We are so grateful you wanted to participate and hear Marietta's expert opinion on these things. So we're going to get through as many of them as we can today. We probably won't be able to tackle all of them, but we could save those for an upcoming Ask Marietta event. So let's go ahead. We'll kick it off. One of the most popular topics that we got questions about was credit and debt and credit reports and working through all of that. So several people asked how they could improve their credit. Some had lost jobs, some had been victims of fraud, and so they want to know, how can they start to build that credit up without becoming the victim of another scam?
Right. Well, one of the first things I would suggest someone does is get a copy of their credit report. And annualcreditreport.com is the one go-to source to get that information, to get copies of your credit report from the 3 major credit reporting bureaus. So that's the first start. The next thing, time is your friend in building your credit again. It's a record of your payment history and behavior over time. So to improve it, you're going to have to just take time. And one thing you really want to do is just pay on time. And that sometimes gets challenging, but just remembering, maybe do auto pay or have reminders come through to help remind you to make those payments on time. And that's a steady thing that just makes it easy to improve your credit over time. If you can't do that, I would recommend that you contact the creditor. Let them know you're having challenges, and they may be able to help create some solutions for you, some payment plans for forbearing on anything like that, or any loans you have. That really will help and make a difference. And if you get any agreements like that, get it in writing. Have them email you, have them send you a letter, have some documentation so that you have proof that some arrangement has been put in place. And then ask for help from legitimate credit repair companies. There are companies that can really help you. The Department of Justice on their website has a huge directory of companies in your state, in your city, or in your county that are legitimate credit repair companies. And they can really help you in situations like that.
That sounds wonderful. And those are really, really great tips. So one of the other questions that we got from people is, what is the difference between a credit report and a credit score? And people were curious about what actually goes into making up a credit score, and then if they can get the credit score for free. Because I know there's a place you can get the report for free, but the score might be different. And can you explain what the difference there is?
So there are 2 different things, like you just said. The credit report is really a record of your payment history over time. It includes information about your payment history, about who your creditors are, about companies that you have accounts with. It's your mortgages, it's your installment loan for your car, it's student loans, it's credit cards, it's everything that you have records on. It also includes information on judgments. If there was a bankruptcy, if you had a lien on your property or anything like that, that's also included there. And it's really a record of your behavior over time. And if your accounts are current, if they're in default, if they're delinquent, things like that. A credit score takes all that information that was in your credit report, compiles it to create a score. And every company, there are multiple companies that create credit scores, but they're different scores. So one company A may create a score and another one may create it, and there'll be two different scores. And they're based on same sort of criteria, your payment history, the types of credit you have, if they're installment loans or if they're mortgage loans, information about how long your credit history has been, things like that. But they'll give different weight to the different factors. And so one company may care more about how long your credit has been in place, whereas another one cares more about how much you owe. And so that creates differences. So there's not one credit score, and even in different industries, excuse me, have different scores relating to what they value or what means most to them. And that creates a score. So there's not one score that is one credit score, but there are multiple ones from different companies. And they're not normally free.
I was going to ask, yeah, in terms of the money piece, yeah.
They normally, there is a price associated with them. It depends. But in some instances, if you're doing business with a company, they may give you your credit score to say, you know, after they've run your credit report, they'll say the score we have for you is 675 or whatever it may be, and they'll share that information with you. But in many cases, if you want it on your own, you'll have to go to the websites that provide it and pay a fee.
That's great to know. So our next question actually comes from Martha, and she had a really unfortunate situation. She wrote in and said somebody tried to use her credit card information online. She must have gotten hacked or something like that. And it was actually her credit card company who alerted her to the problem, and to protect her, they shut her account, which was good so that nothing further could happen. But Martha wanted to know what she can do to better protect her identity online, and does she have any sort of recourse against the hackers? I mean, is there any actions she can take?
Oh, well, that's just a tough situation to be in because we use our credit cards so much for all our purchases, and particularly online. I'd say there's a few tips that she can take, or steps she can take to do that. First one I would say is try to use secure sites. When you go to the payment page on a website, if you're shopping online, I would suggest that the website, if it has HTTPS as the part of the URL, that S signifies that it's a secure website. So that's a good key. Also, if you see a padlock on the top or in the URL bar, that also indicates that the website is a secure site. So that's kind of a first step when you're getting to the payment screen, that you're in a secure place. Another thing is be on a secure network. I know that a lot of us, we're out, we go to a coffee shop, we buy coffee and sit with our laptops and shop or whatever it may be. But you want to make certain that you're on a secure network because you don't know who has access to the network, particularly if there's no passwords associated with it. So you want to make certain that where you are and when you're submitting your credit card, that you're on a network that is secure, that no one can get access to it, and that you know who has access to it. A third thing I would suggest potentially is using like a digital wallet or electronic payment service, so that in those sorts of situations you don't actually give your credit card, you log in using that password, and then that company submits your payment information to the retailer that you're using, and so that reduces the number of hands that your credit card information is shared with. And finally, one thing you can do offline that you really think about when you go to restaurants, you give your credit card to pay for the bill, and the server goes off to wherever they go to process your credit card, but you don't know where they've gone, you don't know, it's 5 minutes where they've been with my card. You really need to think about that. You don't know that person from Adam, so you really want to make certain that you're really smart about where you're handing your credit card off to, that you're in control, that you can see it when it's not in your hands specifically, and then potentially pay with cash in situations like that where your card will be gone for a while. Just reduces the number and instances and chances for someone to get a hold of your credit card and use it in a bad way.
That's a really great tip, the in-person one. I know when I am out at a restaurant all the time, I almost always pay with a credit card because I never carry cash. But you're right, like I don't know that person, and they walk away. That's something that I never would have thought of. So staying on the topic of credit, Paula wrote in and she wanted to know, can companies use your credit report or can they run your credit information before they decide to hire you for a job?
They can. That is a very common thing going on in the job market these days. Companies do run your credit report, but they have to get your permission. They can't just pull up your credit report without any approval on your part. That has to be permission, normally written as part of your application process. However, if they choose not to hire you because of information that's in the credit report, so not just because your resume, if they choose not to hire you because of that, another story, but if they choose not to hire you because of information that is there, they have to let you know that specifically, and then allow you to have access to the report that they use to make that decision. So you also have the opportunity to get a copy of that report within, I believe, 30 days so you can see the information that they had that they made their decision based on. But if you are in a job market, I would recommend that you get a copy of your credit report before you start the application process so you can dispute any negative information, or I'm sorry, incorrect information on the credit report, and just have a equal standing with the hiring manager so you know what information they'll be evaluating.
That's a really, really good tip. And you mentioned negative information or incorrect information, and that was another really popular topic that we had people ask about. So I guess it's kind of a two-pronged question. The first question was, is there a way to get negative information removed? And then the flip side of that, is there a way to get incorrect information removed? And I know those can be the same thing. Sometimes they're different things. So I figure it's a little bit complicated. I'll let you explain how that all works.
Yeah, there's definitely related situations, but they are different. So negative information, if it's accurate, if you missed payments, if you didn't pay your student loans, or there's collection notices on your account, then if it's accurate, it has to stay on there. And there's different statutes of limitations for the length of time that different pieces of information stay on your credit reports. For instance, bankruptcy stay on about 10 years, but if there's like a lien on your account, that can stay on indefinitely until you take care of the lien. So different sorts of information stay on for different periods of time, but it stays on there if it's accurate for that period of time. If it's incorrect, then there's a dispute process that you could and should take, because it's your information. A lot of decisions about your life are made based on this information. So your first step would be to contact the credit reporting agency that has the information on their record, and let them know. Send them a certified letter and include information about your name, your account contact information, the dispute. Send a copy of the credit report that has information on there. Circle it, highlight information there, and let them know this is incorrect. And any supporting information from the company that you did business with, to let them know this is really what the situation is. I would also encourage you at the same time to send a similar correspondence or communication to the company in question, the retailer, the banker, the creditor, and let them know this information is incorrect. You've submitted information that's wrong about me and my accounts. I need you to correct it. And so when you send those letters, the credit reporting agency has 30 days to investigate and reply to you with information to solve it, or with further questions on their part to help resolve the situation. And if you feel that the company has not solved it to your satisfaction, then you can file a complaint with the Consumer Financial Protection Bureau at consumerfinance.gov, and they can really help facilitate the communication between you and the company.
Oh, that's really, really great to know. So we're going to change gears a little bit. I know we've talked a lot in the beginning about the credit. It's a big deal. People had tons of questions about that. So we're going to flip gears a little bit. We got a question from Ronald, and Ronald is experiencing some problems with his car. He bought it in November. It's been in the shop 5 times for repairs already. And a lot of times it's been for the same exact problem over and over again. And he was wondering, is there anything he can do? Do lemon laws apply here? Can he file a complaint? Because obviously he's really upset with not having access to this car he bought.
Absolutely, and it's a new car?
Yes.
A new car. Well, lemon laws probably do apply, but there's some criteria you have to think about to determine if this is a situation or not. First of all, the lemon laws vary from state to state. So the laws in California may be a bit more consumer protective than the laws in Texas or whatever state you're in. So you need to check with your state's Consumer Protection Office or Attorney General's office. I always mess it up. But a couple of criteria that factor into it: the number of miles or months that have been driven. So within like the first 12,000 miles, general kind of guidelines on the amount of time or distance that's been driven. So if it's in that first early period of ownership, that's a possibility that it is a limit. Also, was it a serious defect? So if the knob on your radio breaks off, that's not going to qualify to say it's a limit. But if it's the brakes, if it's steering, if it's anything engine related, that's a substantial kind of problem, and it could qualify as a limit. And to determine if it is, again, it has to be a substantial defect. It has to have been in the shop for about 30 days, or it depends on the state, but about 30 days out of a year. Like, you think about being out of your car for 30, or being in the shop for 30 days out of a year, that's a lot of time. And then that you've given sufficient numbers of times to allow the mechanic to fix the problem. It's normally about 4 to 5 times a month, or within a year. But again, it depends on some states. Some states say it only has to be 4, some say 6, whatever it may be. So those are a couple things that you have to think about. In Ron's case, he has a couple things he should do. He needs to contact the manufacturer first. He needs to document all the problems he's had He needs to have send copies with the letter with the receipts, work orders, invoices, any documentation related to the service that's been done in his car to let them know that he has made these efforts to get it fixed. And if they can't help him, then he needs to check with his state's rules. But many car companies actually have mandatory arbitration clauses, so you can't go to court. So he needs to check what the mandatory arbitration rules are in the contract you signed when you bought the car, and then go forth from there. If that's the mandatory thing, his state probably has a list of approved mandatory or arbitration companies that can help in that situation. And if that is the case, then that would probably be the next step.
Wow, that sounds like quite a process.
Yeah, getting a new car and stuff. But yeah.
Well, Ronald, good luck. I hope that helped, and that maybe you can at least start arbitration, reach out to the car company, and get some resolution there. Yeah, it's a really unfortunate situation, and we're very sorry you're going through it. We're going to, again, switch gears a little bit. Another really popular topic that we got a lot of questions about dealt with housing and mortgages, refinancing. I mean, that's a hot topic in this market. So one person asked us and said, I'm behind on my mortgage payments. Other than bankruptcy, what are my options? My interest is fixed, and refinancing is not currently an option.
Well, refinancing is, well, that's generally the first thought in a situation like that. But I would recommend that he try to work with his lender. They may be able to help him out. If that's not an option, the Department of Housing and Urban Development has Making Home Affordable. They have information that could potentially help you, as well as their housing counselors, who are great resources. Their housing, that's like their whole focus is housing and housing issues, and should you buy, should you sell, things to think about. So there is the HUD program again, and so I would recommend contacting the HUD counselors in your city, your state. They have a whole directory on HUD.gov that you can find out if that's the best option for you. And then states and cities have departments of housing, which they can also provide some information on programs that are local or nonprofit organizations that have reputable programs that can help you in this situation. But it's a tough situation. It's a lot of calculations and decision making that are required. But I would say seek a professional.
I was going to say, and it sounds like you can go the federal, state, or local level depending on your situation. Right. So lots of potential places.
All three. You never know.
To reach out, absolutely. So staying on that same subject of mortgages, Dee asked us, is there a way to get a new lower interest rate and finance for less than 10 years? She's looking in the 4 to 5 year range because she only has about 5 years left, and she's never refinanced to take advantage of lower interest rates because she didn't all of a sudden want to have payments drawn out over 10 years again.
Right. Well, I can't say a yes or no. It depends, because everyone's situation, it's a lot of different variables that go into the situation on if you're going to finance or not. So there are loans in lots of different time spans, and there may be one that's good for her. If you think about with such a short window, so 5 years, you said, that's fewer years to recoup all the costs as far as the inspection costs, home and closing costs, fees, points, all those sorts of things. And so even though there's a reduction in the amount of the actual monthly payment, it may not be enough to recoup those fees that you're about to pay to go through the refinancing process. There may be additionally some fees that are stipulated in your current mortgage saying that you have to pay a balloon payment or a fee for early termination of that loan. And so when you weigh all that out, it may not be worth it. And then you think about also the tax ramifications. How does that affect your tax bill from year to year? And it's 5 years, so it could be potentially a good situation, but I think you just have to look at the whole entire picture to determine if that's a good solution for you. The Federal Reserve, I don't know if you can Google it, but there's a publication or a website called A Consumer's Guide to Mortgage Refinancing, and they have a great tool on there that lets you put in the current mortgage you pay, the potential new payment, and it does the calculations for you, so you can kind of get a ballpark figure understanding if this is something that she wants to do. Another thing to think about is if the interest rate that was offered or mentioned or advertised was very low, but it was maybe based on a particular credit score. And so if her credit score does not qualify for that, she may not be getting the savings that she thinks she may. She may. I don't know that information from her. But that is another variable to consider when deciding if you're going to refinance, because the interest rate that's been advertised may not be offered based on your personal criteria. They cannot take into account any of your like age, race, anything demographic, but as far as your credit score stuff.
And I was just wondering if you could repeat the tool for the Federal Reserve one more time for folks. I think that's a great, great resource, and I think we just put it out there so people can play and do the math themselves.
It's if you go to USA.gov, you can do in our search a consumer's guide to mortgage refinancing, and if you go through it's an electronic publication, and if you go through it, scroll down, there's a calculator that helps you calculate based on the current mortgage, the interest and fees, and all those sorts of things to determine if it's a good fit for you or not, or at least get a good idea.
Right, and I think that'll help a lot of people who might be tuning in kind of get a picture of where they are, because I know we had a ton of questions about mortgage and refinancing, so that might be a really, really good place to start. And so, yeah, our next question follows right up on that. What things should people consider before they make the decision to refinance? And I think some of what you said about looking at the money might play into that. Was there anything else that people need to think about?
Yeah, a couple other things which are related to things I just mentioned on the previous question, definitely play into that. But you just definitely research the rates. What are different banks saying? Look in newspapers, call different different websites, see what different banks are offering or what's kind of the going rate. Also, you want to research lenders. You don't necessarily want to go to just one lender because you heard from them that they have this rate. You want to see, are they reputable? Do they have a good reputation? A lot of people got scammed, particularly earlier in like 2008, because they went with a particular lender who promised all these great things and couldn't deliver. So you want to make certain that they, are above the board, that they're not charging additional fees or put these weird stipulations in contracts so that you're stuck with a crazy bill at the end of your loan. Unfortunately, not all companies are reputable, so you just have to do your own due diligence, and you would check with your state's banking or Department of Banking or Department of Financial Institutions. They can help you get some information on if there are any violations in their record or history. And then look at your current mortgage to see if there are any penalties for refinancing. Again, I mentioned that in the last question. We kind of talked about that. Is that those sort of things people don't, it's stacks of paper that you sign when you get a mortgage, and you may not read every little line. Right. So you just want to make certain that there are no other hidden fees that you'd be responsible for if you cancel that or finish that mortgage and then refinance.
Okay, that's some really good advice, and I know housing and mortgages, that was a big thing that people really wanted to ask about, and I know we tried to get to as many of those questions as possible, but I do want to switch gears a little bit, so we're balancing. We've got so many questions on so many topics. It's really hard to fit them all in. So our next question comes from Lee and deals with life insurance, and Lee asks, can you please explain the most important differences between term and whole life insurance? I feel like I'm missing some important detail or will make a terrible decision. And I know life insurance can be very confusing. So can you shed any light on that for us?
Yeah, I won't go too in depth, but I'll give a couple, like three factors that are the difference between the two things. It's the length of time, the cost of the premiums, as well as if there's a saving or investing component. So term insurance is really considered the cheaper of the two, least expensive, and it's for a specific period of time. So if you get a 10-year policy, then it's for 10 years, and if you die within those 10 years, then your death benefit is paid out. But if you live through those 10 years, then you get nothing. Your beneficiaries get nothing. You've just paid into it, and you've guarded your family, but nothing comes of it. Again, it is cheaper, and then also it's no saving component. You've given the money, you don't get a refund because you outlived the policy. There is no refund stipulation there. You paid it, there's nothing. With a whole life or universal life policy, it's considered permanent in a sense. It just, as long as you continue paying the policy premiums, the policy is in effect. It is considered to be a little more expensive because it does last over permanently, so there's that factor of it. And so you're paying for that. And then the other feature of the whole life is that there's a saving component to it, an investing component. So if you don't use the money, if you don't need the money, but there's the cash value that's kind of accumulated in the value of the policy. So if you're not using it, if you don't need it, if you need to borrow against it, that is an option. There's an investing or a saving component there. So when you pay your premiums, there's a saving. Part of the premium is kind of, in a sense, paid toward the saving portion of the policy versus the direct death benefit. And so those are kind of the big differences: the time, the actual out-of-pocket cost that you pay on a monthly or quarterly basis, and then just that saving or investing component. And really, it just depends on what your time frame is, what you hope to accomplish. If you're trying to just guard against, if you think you're going to die, you're afraid that you die before your children graduate from college, and you're 10 years out, then maybe that's a situation where you want term. But if you want to just guard against life in general, then maybe the whole. And it really is just depending on your preferences and what you need or what you foresee will be happening in the next few years.
So yeah, it sounds like a lot with a lot of these things, it depends on you and your personal situations. And you have to do the research and then kind of make what you think is the best decision. That's so much of this seems like.
Absolutely. And it really is talking to people who are professionals. I would suggest if you do insurance that you talk to a professional who's maybe an independent insurance policy provider, so they're not necessarily tied to one particular company or trying to sell one particular type of policy, but they're kind of agnostic. They don't really have a preference for one versus the other, and that they're really there to serve you. Again, you can contact your state's Department of Insurance, and they have probably a listing of or agents who are certified to sell insurance products in your state. So.
Marietta, thank you. This has been such great information, and I know we're going to try to take one more question before we wrap up. And so we've got one from Lori, who wants to know, is there any way she can get her phone off the lists where everyone calls? She's sick of getting sales calls. She's asked them to stop calling her, and they never do. Do you have what can Lori do?
All those phone calls get us all. I think no matter how, everyone is susceptible to the wonderful telemarketing calls. The first thought I'd say is really to use donotcall.gov, and that is the National Do Not Call Registry that's taken care of by FTC, and that is your first step. And if someone calls you, as a telemarketer calls you 31 days or after you've registered, then they are not in compliance with it. So 31 days and you should be protected. And then some states actually have their own do not call equivalents that can protect you from these sorts of calls. But there are certain types of callers that are not held by the do not call. If you're a charity, if it's a political organization, if it's a surveyor, they are not held bound by the do not call requirements. Another thing is if your cell phones are actually barred from automatic dialing, and most telemarketing is automatic dialers, so they are already barred from calling, but you can register your cell phone too, just as an additional precaution. As far as like being able to contact, it's hard to know a phone number for who to contact at the particular company to stop them, but if you do, you can definitely report infringement of that on the Do Not Call website, and also donotcall.gov. If you were just sick of all telemarketing by mail and by phone, you may also consider going to the opt-out, let me look at the website, the optoutprescreen.com, which helps to stop mail, the junk mail that you get for credit card offers, insurance offers, things like that, that you just have no need for, and it continues to just clog up your mailboxes. So that's another option, but I think we're all kind of get susceptible. I think it's slimmed down a little bit, but it's definitely still a situation that we all have to deal with.
So the two important URLs there are the donotcall.gov and then the optoutprescreen.com.
Yes.
Okay. And that's for your mail and stuff. Well, Marietta, thank you for all this information and for taking the time to hang out with us today. This has been fabulous. Thank you for everybody who watched. Thank you for your patience on our technical difficulties with the sound. Again, I apologize for that. If you have more questions, please, you can keep sending them in to us. You can email them to us at askmarietta@gsa.gov, or you can tweet them to us using the hashtag AskMarietta, which, as you can see, is behind me here. You can also post them on our Facebook page, which is facebook.com/USAGov, or on our Google Plus profile, which is probably where you found this Hangout. And then don't forget, you can also get your own copy of the Consumer Action Handbook so you can be as smart as Marietta. And you can get that by going to promotions.usa.gov/my-CAH. Thank you again, everyone, for tuning in. And like I said, if you have more questions, send them in.
Oh, look at them.
And get your copy of the handbook.
Yay.
So you're actually still